And hello, welcome to Interchain Live. Thanks for joining us. This is Ryan Munn here in Vermont, and I've got Roger Glovsky and Stephen Farrington here with us. You may know them from our previous videos. I'll save us the time on the history. You should definitely check them out on LinkedIn if you want some background. And we're talking about Token Fest. We've all attended Token Fest Boston 2018, had a great experience, and we managed to bump into each other a few times, but we all got, I think, a very different experience as well. So I'm pretty excited to talk about that. So why don't we kick it off? I think, Roger, you were the early riser that made it in there and got the some of the bonuses that were available to the first comers. So why don't you share some of that with us?
Sure. Well, it was a great show. The bonus that you're referring to is the cold storage coin that they were giving away to the first 1,000 attendees. So that was kind of fun. It's just a copper coin, and they also come in gold and silver, but they gave the copper in the bag. That was kind of a fun giveaway. There were a lot of great giveaways. I got this Metal Pay hat from the Metal Pay booth. They announced their launch of their app on the Apple Store. So that was a big event. There were a lot of things going on, as you mentioned. The biggest takeaway that I had, and maybe that's a good place to start, is sort of what some of our takeaways were, what you noticed. For me, there was just it was great to be around people who were. It was great to be around people who were interested in cryptocurrencies and blockchain. I mean, I think we've gone through a 9-month decline in the market where popular interest kind of faded away, and Token Fest was sort of, particularly for Boston, it just felt like this was a great place for people to get together and celebrate the innovations that are happening in the blockchain industry. So I won't try and tell you everything I took away. We'll get into the conversation, but that was the biggest takeaway that I had, was that it was just great to be around people celebrating blockchain developments.
Awesome. Yeah, and so I'm sharing the website here just to give people an idea. You can go to tokenfest.io, check out what speakers were there and see what went on. There was definitely a lot of options with 3 different areas with speakers and demos going on. Stephen, what did you end up catching when you came into the conference?
Yeah, so I wasn't able to make the first day. I showed up the second day. I went to several of the speaking events, and I kind of toured around the booths and spoke to many people. I guess a couple of things stood out for me. One was actually I had hoped to see a little more in the way of sort of solid, I guess what I shouldn't say solid applications that really wowed me and looked like they were, there were a few of those, but I had hoped to see more. And what I was a little bit surprised, but I shouldn't have to see so much of, was how much of the activity was still sort of around just trading and trading coins and exchange technologies and things like that, without so much the application layer that's going to add the value we're all expecting to come from tokenization and from blockchain.
Yeah, interesting you say that. Yeah, I mean, I think there was some interesting speakers, and I heard some great opinions, some definite voices for decentralization. But it does seem like there's still a disconnect somewhere in terms of how do we get this down to the user. Not everybody's going to handle these keys, and not everybody's going to handle the complexity of these systems, and a lot of these things that even CryptoKitties. It sounds fun. It sounds like a fun game. It's a cool way to intro people to the technology, but they really have to get introed to the technology, right? You have to be able to plug in the right gas amount and do an Ether transaction and sort of do all these kind of complex things while just trying to play with some CryptoKitties. So that user experience isn't quite at that level yet that we're all hoping to see, where we can really onboard our friends and family and grandparents.
Yeah, but there were some applications that are really, I think, really smart and really mature and are going to go places. Matt, we can talk about all these later individually, but Masterworks is one. I think the Everpedia idea could get some traction, especially given the experience of the team. There was, some of the things like there was sort of a tokenized Airbnb type thing that it's a great idea, but it wasn't sure that they had it completely baked and really had their direction together. And so
right. Did any of you guys happen to see the demo room or catch any of those demos in there?
Yeah, I went to a few of them.
Okay. Yeah. What did you catch, Roger, there?
There were some great projects. I'm thinking particularly just to respond to your comments earlier about the simplicity and whether this stuff's easy to use. The Metal Pay one was a good example of where they are bringing it down to the user level. They've created a very simple app. I'm a little biased because I have invested in them, but their demo, their products, just show how simple the app is to use if you want to exchange money. They're, a blockchain equivalent of the Venmo application that young people are using to, make it easy to, share costs and to, quickly send a friend a few bucks. Metal Pay is trying to make it just as simple. And it's a good example of an app that is released. The solution is here. It's working. The token and the coin, Metal Pay, which you get an incentive for using the app. That's already been on the exchanges for a while. So I think that's one example. There were a lot of demos there. They had 2 full days and they scheduled demos in the demo rooms. Really every minute of the day. I only went to a few of them, but there were a lot of apps there that I thought, where you're starting to see, real products being released.
Circle,
yeah.
too, that's very mature. I've been using it for over a year now to send remittances across the Atlantic without any friction, any transaction fees, anything like that, and so that's another one of those, another sort of mature, easy to use payment.
Yeah, absolutely. Absolutely. And I know Ambrosis is one that I've seen a couple times. I've seen them in New York in the past. And one of the things that I like about them is that, they're not going after the crypto consumer necessarily. They have a whole business model around technology implementation, sensor analytics, those types of things. And they have business interests in sensor development. So they have business interests in actual IP, and they're doing some real world business applications. And then their blockchain is a tool, right? It's a piece of their business in how they're approaching servicing their customers. So was there any other sort of swag that you might have picked up there that was interesting? Who else was giving away stuff there? Were there some more t-shirts?
I got a Ledger t-shirt.
You got a Ledger t-shirt? Yeah, they had some demos too, right? They had, what was it? There was some keys. There were a couple of cold storage wallets that they had that were like pin-locked keychain devices.
Yeah, I stopped by their booth. I didn't go to their demos. I just talked to the...
Yeah, well, I noticed there was a few of those. That's what was interesting is there was like 3 or 4 companies there that were all some kind of a hardware storage device. And I find that kind of interesting because, that seems to become a very popular thing in the market. But I didn't see a lot of like YubiKeys or, other type of like 2-factor authentication tools. And so it just seems kind of interesting, how the market is sort of defining that. But what we really need to focus on when it comes to security is what's our protocol and how do we keep things secure. And there was some interesting speakers. I'm trying to remember who it was that talked a little bit about that.
You were talking about the hardware storage devices. So I did take the opportunity to buy a Ledger Nano S.
You did?
Existing proven technology.
Awesome.
So that's a good thing. But one of the things I thought was cool was I don't remember the company's name, but they had this hardware device that was looked like a credit card. Did you see that one?
That's right. Yeah, that's one of the ones I'm talking about.
Very sick. It wasn't available for sale yet, but I really thought it was a cool concept.
Yeah.
Because I like the Nano S. It's nice, but it's kind of like another one of these thumb drives that you have to carry around. But the credit card felt like you could just put it in your wallet, and it kind of felt more like actually, a credit card.
Right. Yeah, absolutely. And it looked like there was one there. It looked like, did it have a magnetic strip even where you would actually scroll through their little menu on the device and select the credit card that you wanted to use? And I'm not sure if this is one of those BlockPass IDN. Yeah, there was so many speakers there. It's definitely hard to try to keep track of them all. But that was very interesting. You could have one card and you could scroll through, select the credit card you wanted to use or the account you wanted to use to pay with, and then hand it over to the cashier for them to swipe the card, and it would be the card that you've selected digitally.
Wow. Yeah.
So pretty exciting innovations in fintech and consumer technology there. Were there any other like real takeaways that you got as far as decentralization or a particular speaker that really rung to you?
Yeah, for me there were. First of all, I saw what was supposed to be the great debate between Alex Mashinsky and Travis Kling on Friday morning, and it was really the great love fest. I mean, they agreed. Very good points, though. Sort of strong criticisms of the financial industry, financial services industry, and banking, and I guess for people who aren't familiar with Mashinsky's message. He points out how our deposits now, not like in the old days when you deposited your money in the savings and loan and you earned like 3 or 5% interest, and they loaned it out at 7% for somebody's mortgage or whatnot, or to help the local restaurant expand or whatnot. He says, we're getting 0.01% on our deposits and paying an average of something like 20.5% on credit cards. And so all that margin, is going to that industry. And of course, he's pushing his alternative, which is the Celsius Network's. It's a lending system it's a peer-to-peer lending system on Ethereum. Yeah, so I thought those guys were pretty refreshing, and partly because they were sort of some of the only voices that were still carrying that sort of a social mission to change the world sort of enthusiasm.
Mm-hmm.
I don't know when the right time is in this conversation to delve into it, but there was a later panel that Mashinsky was on where he was talking with the founder of there was a great question from the audience about creating community. It was a founder of somebody who was trying to do a social media.
Whoa, look at this. 7.1% APR for deposits in dollars, huh?
Browser.
It's pretty good.
Yeah. So I'm going to, personally, my takeaway is I'm going to be moving my Ethereum into that service and lending it to people who need it to
7% on Litecoin,
finance their seeds in Africa and whatnot, right?
Right. Yeah, it's interesting. Wow. Yeah, it's been a while since I looked at Celsius. I've been watching them a little bit since I met them in Dallas in February, and I thought they had a really interesting model, but I had not stayed on top of their progress. So I'm really glad that we're having this conversation.
And the thing that's cool, that impressed me about it is, Mashinsky has cred, right? So he's built a few, he's had a few successful edits. He developed the VoIP protocol that really was a way to tie us all to. In fact, I sent him an email afterwards and said, nice meeting you, and thank you for giving the world voice over IP, because that made me a more international citizen personally. It allowed me to communicate with people overseas that I wouldn't have spent the money on the telephone company to do, prior to that.
Right.
So he's kind of trying to do the same thing. I mean, his point was that was a protocol layer that connected people, and it created a new type of community. And he sees blockchain as a protocol layer that can connect people to exchange value and build other communities. Like I can lend to the people through Celsius to the people that need it in some underdeveloped place, or maybe even on Main Street in the town down the street from me.
Right. Yeah, absolutely. Yeah. So, and they're offering leverage against crypto holdings too, right? They're allowing people to collateralize their crypto.
I haven't dug that deeply into it, so I can't comment on that.
Okay. Well, I'm just reading off their website.
Uh-huh.
So yeah, excellent. Well, awesome. Any other Roger takeaways on your part? Cool discoveries.
Big takeaway was that you know, a lot of the people there, you know, sort of had a sort of a low key sort of demeanor or approach to it. At which point, one host or speaker commented like, where are all the bold statements? You know, why is it that we're all cowering? What was interesting was that it reflected really the 9-month bear market that we've been in, where the technologists have gone back to work to actually build these projects, and all the investor hype has kind of gone away, and the people who have been investing perhaps are a little bit down because their portfolios are down. The big takeaway was there was sort of a sense that, you know, these were the stalwarts. These are the people who believe long-term in cryptocurrencies, and they're not worried about the market fluctuations. And there was also this sense that that maybe we've seen the bottom of the market. So one of the speakers was John Najarian, who's a Wall Street trader, and you know, he was a little cautious. He makes all kinds of deals for big companies trading cryptocurrencies. But he said their sense was, and he pointed to a number of market indicators that, you know, this feels like, you know, we're at the bottom, or we've, you know, gotten beyond it. So I detected sort of a note of optimism, but it's interesting to recognize that we've kind of come off of a very long period, and that the boldness will or should come back to the market as, or come back to the industry as the market starts to improve.
Yeah, it's interesting you say that. So, you know, obviously I've been thinking about this quite a bit, given, you know, my attention on the market. And if you look at the Bitcoin trends, there's historically there's been lots of correlation made between the search trends of Bitcoin versus you know, Ethereum or blockchain or anything else. And when you see that spike happen, it really goes up. And what's interesting to me is that as I was looking at that, I was seeing that that peak really happened, right? It really started November 19th of last year when it started to really go up. But Bitcoin was in an upward trend pretty consistently without a ton of hype for the entire, you know, 2 years before that. So it's kind of interesting just kind of watching this market flush out and shake out. And, you know, as many people predicted, there's lots of projects and things out there that are demonstrating not very much. Meanwhile, there are lots of other people that are just, you know, with their nose to the grindstone, building and developing things. And so we're, you know, it does look like we're at the bottom if you look at this sentiment line too. If you start looking at these trends, you know, that sort of Google search trend has gone down quite substantially now. And if you look at the news, then you also see, you know, all kinds of interesting things coming across. Like if you look at CoinDesk, there's some very interesting developments in blockchain and Bitcoin, moving the conversation forward. And so I'm curious to see where it goes. It does feel like we're at the bottom of the market, and it seems like even the past few conferences that I've been to have been pretty similar in that there's definitely more of a core group of people there as opposed to the hype. And I've gotten almost no questions about like, oh, what are you holding? You know, that was in February. I was still definitely getting that when I talked to a new person. Very often that's the question. Oh, what are you buying next? Or what are you holding? Or what are you watching? And that's not been the conversation at all. I think zero of the conversation has been around that as we've been navigating these crowds of people that are much more interested in the underlying tech. Oh, and I was not sharing my search with you guys. So yeah, so this is I was just popping into. Of course, there's some hacks because we've got, of course, hundreds of different exchanges out there now. So lots of poor security to be had. But
yeah, so that's another thing, you know, that this trend of these white label exchanges, That's maybe something we should talk about a little bit
Yeah.
in the context of the block token fest. Because that was one of the things I was surprised by. I mean, I wasn't really aware of that much of all the development that's gone into, developing exchange technology for sale now for people to pop up their own exchanges. But I guess when you look at the incentive structures and the ecosystem, it only makes sense that if you're launching an ICO and you want to assure that your coin's going to be tradable with somebody, the thing to do is build your own exchange and put your coin on it, right? So that you can. And then there were a couple of outfits. I can't remember the name of the one I looked at. It was some Russian fellas who were at the booth staffing it, and they were offering this sort of white label exchange plus liquidity.
Right.
So,
right. Yeah, which is interesting too, because there's some question about that, right? If you get an exchange that's charging a listing fee and offering liquidity, is that not in violation of certain SEC regulations for market making and insider trading? Because if you're paying a fee to an exchange to ensure that you're getting liquidity and activity, that sounds like it could very easily become insider trading.
Oh, no doubt about it.
Yeah. So that's kind of interesting, exploring, I see these exchanges all over the place, and yet at the same time, like, exchange code isn't that complicated. What really the complexity and cost in an exchange is the security protocol and the actual real live infrastructure you need, like people and custodians, in order to service an exchange. So I got to know, did either of you guys happen to meet any of the guys, the folks from Prime Trust?
No.
Okay. So Kingdom Trust has been around for a while. And Prime Trust has been kind of quietly in their coattails, if you will, because what this is a custody provider. So everybody talks about, like, oh, custody is the big problem in Bitcoin and stuff. It's like, well, that's actually kind of baloney, because we have custody agents. They're out there. Kingdom Trust is one of them. They're actually the backbone. I believe that is it BitIRA or Bitcoin IRA, a couple of those IRA solutions. They use Kingdom Trust. As an individual, you can approach Kingdom Trust and create a self-directed IRA, or what's known as a digital IRA. And Prime Trust offers similar custodian accounts. And so, one of the interesting conversations that I was having with Prime Trust was the need for really large organizations to have more than one custody partner, right? If you have $100 million in accounts, it may make sense to have them in a diversified set of custodians. Granted, the theory is that you can trust your custodian, but in the interest of diversity, resilience, disaster resilience, you should likely have more than one custodian involved in holding your accounts or assets. So Prime Trust would be an alternative custodian. There are others, but these are a couple of the largest ones, and currently well-tooled to handle crypto and have some interesting, opportunities and willingness to work with crypto and blockchain companies to help provide those services. So I know we've had some conversations about funds in the past, and so that would be an area where these guys would be sort of the backbone to any fund that I were to be involved with.
So when you talk about the custodian, you're talking about actually holding and securing your coins, where it's a trusted partner, or other.
Yeah. So for instance, if we were to say we're going to have an exchange focused on Vermont, maybe connected with some bank or something like that, and we're going to have services available for crypto, we're going to probably want to secure 90+% of those services through a custodian, of those assets through a custodian, and have hot wallets that have the remaining balance available as far as live day-to-day activity. And so having those custodian services available, they can be pretty quick to respond, and they can have different sort of security levels on what they're holding, but they would provide that backbone layer of security on the individual assets.
Well, so is it just me, or does it feel like we're moving backwards when we create a whole industry out of custodians? I mean, the whole idea behind decentralized currencies is that we disintermediate, the third party the quote trusted third party because we can trust the system.
Right.
And now I think people are so afraid they're going to lose their Bitcoin, or they're going to get hacked or stolen, or that they need to have multiple keys. They don't trust themselves to hold their own keys on this trusted network. So now the trusted third party is being moved from
so that's a really good point
to holding the money.
There's another function for some of these trust companies, right? So Ryan mentioned, self-directed IRAs, for instance. Because of the regulations regarding the retirement benefits and the taxation of IRAs, you can't have a self-directed IRA unless it's through a trust.
Of course, you need a third party to hold it in order to qualify for tax purposes. But the IRA, that's a sort of a limited, Yeah,
and that's not a place where I would recommend anybody holding their crypto anyway, right?
Sure. Well, if you set up it with a Roth IRA, that might be an awesome place to hold your crypto.
Yeah.
At least for a small portion of it. So yeah, exactly. So I think your point is right on, in that there's a little bit of going backwards here, but also these are companies that have spawned out of the sort of revolution in fintech, and these are the ones that are handling crypto currently. So these are the guys that are doing the most research in multi-key security protocols and various ways of implementing the technology effectively to disintermediate risk, right? Because while they're taking custodianship, they're also trying to manage that risk and that security factor. So they're really in a sense, they're in R&D for the best ways and best practices. And even if it is they're securing 98%, that 2% that we have secured in hot wallets, they have an interest in our mutual success, though. So they're looking to be involved in that understanding of how to secure those assets through protocol. So it's interesting having conversations with some of their people directly and hearing, they're not even like really considering themselves in competition with Kingdom Trust, because in their opinion, there needs to be like 5 more of these guys out there, so that any large holders could actually exercise multiple custodians on their accounts and be able to further leverage that sort of decentralization of that trust. Because it's really, we say disintermediate and trustless, right? But at the end of the day, what we're really doing is figuring out who and how to trust and why.
And it makes sense. It's really a maturing of the industry. And to Steve's point, even right on your screen there, that list that you just had up, you just took down.
Oh yeah.
It lists the different areas where you need maybe a trusted third party, not just the IRA, but it also mentioned, an HSA account or a college savings account. It seems kind of
501c, a Reg A, D, CF, any of these fundraisings for a startup company, they're going to want this custodianship.
And that's right. You need an escrow agent or a trusted party to hold it for these certain purposes. So it makes sense that as the industry matures, that you'd have these players come into the market. So it's actually a good sign to see them here.
Yeah. I mean, if I have somebody that says, oh, I want to buy a bunch of Bitcoin, and I'm actually going to try to get in the middle of the conversation, the best thing for me to do is to say, hey, I have this great custodian that'll handle the escrow. Let me connect you with them. They're going to handle the KYC AML. They're going to handle the funds transaction. And then I can bring the other party to the table and have them put their Bitcoin in escrow with the same custodian, right? And so that can be something that they could be facilitating. Or if we want that added level of security, we can actually be using Kingdom Trust on one side, have them be the custodian to hold escrow in Bitcoin, and have Prime Trust holding the dollar or whatever fiat currency escrow for that transaction. So there's some interesting opportunities that start to present themselves when as we learn what these resources make available to us.
So along that lines, another trend that I noticed was really a shift towards tokenization of assets. So there are a number of companies there that were talking about, Masterworks being one, and perhaps the most public. I had a chance to talk with Richard McBeath about their tokenizing the Andy Warhol painting. But what's interesting is there's this kind of a shift in the industry where everyone's a little bit cautious at this point about the next ICO and doing securities offerings for their tokens. So they're now focusing on tokenizing assets as a way of raising capital or otherwise.
Right. Yeah, they're sort of tapping into the token craze, but just actually complying with the whole legacy system. It is very interesting because it does open up this sort of, software development side of all this, where you can have assets that have more properties or more functional capabilities than your typical securities. So this is Token IQ. This is one, we're seeing this, that is interesting. I had a short conversation with them, and I believe, if I'm recalling correctly, they had mentioned using Stellar Codebase for their platform, which is interesting because Stellar seems to have attracted a lot of attention from IBM and regulators as a viable platform for different solutions and consortiums. I believe there's a pilot with some bonds trading up in Canada on Stellar's code. And I've had some interesting conversations with developers looking at different ways to implement disintermediated options contracts on Stellar code. So some really cool developments happening there. And then what these guys are doing, similar to Swarm Fund, which is another project I'm aware of, that they're tokenizing equity, and it looks like essentially taking either private placements or funds and then further tokenizing them to make them accessible or available to other investors or family offices. And there's some opportunity here with these networks to really help crowdsource diligence too, right? Because you have all these investors interested. You can have them, providing feedback and doing diligence on the opportunities. And then Masterworks. That's cool too.
By the way, you mentioned how you talked to several people who were working off the Stellar framework.
Yeah.
And, I actually talked to him. I was at the Circle booth, but he was somebody who was he was product manager of one of oh my God, I'm blanking on the big Ethereum developing outfit in Brooklyn that has all the spokes. Anyway, he was porting the application he had started on Ethereum over to Stellar. And I just decided to share, while you were talking and looking at Google Trends a little while ago, I was checking trends on some of the sort of more popular coins out there. So I shared my screen. Stellar interest on Google Trends and Stellar has been rising, modestly over the last 30 days or so, but it's remained above, IOTA, Misago, Cardano, etc.
Oh, interesting. Yeah. Yeah, sometimes it's nice to look at those too. Look, you got to take Bitcoin out of the equation because it kind of overpowers the movements of those other charts. But if you put a couple of them next to each other, you get a much more interesting dynamic between them.
You put Bitcoin in there, it just... Now, my screen's, I tried to share my screen, but I guess it's not.
That would be a great app for somebody to create, is one where you could do your own pairings. If you wanted to compare Cardano to Ethereum, if you could do your own pairings of the two, that would be really interesting.
Oh,
yeah, absolutely.
In terms of comparing binary comparison between two in terms of the Google search?
Yeah, just to see the relative, everything is relative to Bitcoin or Ethereum. And even when you're comparing something that's relative to Ethereum and then you're trying to compare it with another coin that's being traded with Bitcoin, it's hard to compare the two and say, well, am I better off? Particularly, in this market where Bitcoin's been going down for 9 months, which is awful, but the altcoins have been going down, even more.
Well, this is interesting because I don't know, Ryan, if we have a way to get to my screen, but
yeah, we're looking at your screen.
Oh, okay, because I'm looking at yours.
Oh,
all right. So look at how Ethereum. I mean, I would have expected Ethereum to be way out above these others.
Oh yeah, no.
In terms of search frequency, and also what's interesting is that Ethereum seems to be on the decline in terms of search interest anyway.
Yeah.
at the moment. Now, we don't know whether people are searching for Ether or Ethereum.
Well, did you see? I mean, you saw GoChain. I think you made an intro for me there, and there's a couple others. And the reality is that this Ethereum virtual machine is something that anybody can just port and run. And if you run better economics that don't cost you 1,000 times more than running AWS, then running something on the Ethereum virtual machine can be more attractive. And that's what we're seeing is that while the mainstream media is not necessarily seeing this. Ethereum, just like Bitcoin, has now been sort of forked. Not the network, but the code has been forked and re-implemented in multiple ways, and that's created all these other alternatives where companies or projects that have built on Ethereum can just take their DApp and run it on another network, and without a real economic understanding. I mean, we've had all this drive pushing the price of Ether up, but that actually breaks the system. You've got Vitalik Buterin out there stamping his feet up and down going, stop buying Ethereum, people. It's not an investment. So it's kind of interesting. They're going to ultimately, I think that people are starting to realize and understand that. And so we're going to see that sort of investment interest in Ethereum decline. And Ethereum is going to start being recognized for what it is, which is the access token for the system. And that's not competitive unless Ethereum is inexpensive enough to compete with Azure or AWS, at least within some kind of a 20-25% margin difference.
Yeah,
in my opinion.
There are, however, significant barriers to just so if you're creating a new dApp and you're picking a new blockchain to run it on, an Ethereum clone would be great. But if you need to port the history or the current state of your app over, it's not. It's not an insurmountable problem, but it means you have to write code that's going to basically freeze the state and put it in, as a starting initial condition on your new Ethereum clone blockchain, right?
Right. And then you got to keep up on the updates and decide which ones you're going to run or not run, which ones are compatible with your alterations that you may have implemented.
So like CryptoKitties, for instance, they're not leaving Ethereum, right? Because no matter what happens to the transaction cost, it's just going to be, there's too much history there to try to replicate on a new blockchain.
Well, unless they wanted to just spawn a new version of CryptoKitties on a new blockchain, right? A new Ethereum blockchain and say, hey, this is CryptoKitties carbon friendly on the C4 blockchain. And then they've just got a new seed starting a whole new colony of CryptoKitties, which is what we should do, right? We need to colonize every Ethereum blockchain needs to get colonized with CryptoKitties.
Okay.
Well, that's a test of the network, right? Because it gives you a couple of tests. It gives you a test of the actual physical capabilities of the network, the economic viability of the network, and it also gives you a sort of a political test of the network of who and how can interventions take place in the network when the network is challenged or strained technically.
Well, so that raises another question, which is why wasn't Vitalik Buterin there? I mean, it was Token Fest. Most of the tokens are run on the ERC-20.
Yeah.
But I'm just joking. But Satoshi Nakamoto wasn't there either.
Right.
But what I'm really thinking about is why there weren't more coins and tokens represented there. I think this is sort of an industry question. If you think about most popular tech shows, the big dogs in the industry, the big players, the household names, they all show up at the big tech shows.
Yeah.
But the nature of these ICOs and token projects, they're not out there sort of selling their companies. They're not showing up at these shows. And so what does that really say for the industry? You don't see the developers from all the different top 50 coins showing up at these shows. And, what does that mean?
Right. Yeah, it's interesting. Well, I think part of it is that there are lots of events. I think there's some calendar. I was trying to find it right now, but I can't find which one's the right one. But there's something like 60 events per month now taking place. So to a certain extent, there's a matter of, these guys actually, dividing up their time. But there's also
balance into 2 events a day.
Right. Right. And then there's also, there's definitely not everybody's on the same page in the industry. It does seem like when I get to these conferences, it seems like everybody in the conference is kind of on the same page. But one conference group to another, I think there's definitely some divergence in how people see this industry moving forward. The decentralized versus the pseudo decentralized versus the, truly centralized federated, implementations. So there's a lot of, I think, still quiet conflict taking place in the industry. But then also, I want to point out there's an event coming up in New Hampshire that I find particularly interesting because I'm looking at the speakers. Let me share this with you on my screen real quick. And yeah, so these guys have particular backgrounds. This is a blockchainnh.com. So this is a New Hampshire event, I believe in Portsmouth. And but there's not a ton of hype around this event. I don't see a ton of huge, big money token companies. I see Espresso in there, which I think is really interesting. I've met them and I like them very much. They're doing some great work making more developer tools for blockchain so that developers have an easier time getting in to build on blockchain tools. And then I also see people in here like, what's this, Patrick Byrne, right? Is that the CEO of Overstock.com? I see Caitlin Long, influential in Wyoming, passing blockchain legislation. And so these guys, I'm not seeing these guys at these big, these big money conferences, so it's interesting, watching who's saying what and who's talking, who's promoting what and where they're actually showing up in different events can give you a lot of insight, I think, into where they're actually going. These guys all seem to be pretty well connected with a number of networks that are really pushing on social impact and really pushing on a particular agenda as opposed to, which token's going to moon next.
Well, did you notice though the description of the event included? It's also combined with the first Raven coin.
Oh yeah, they've got some collaboration with Raven coin.
Yeah, and Byrne, is that his name? The Overstock guy.
Yep.
He was a big proponent of Raven, which.
Oh yeah, he's made some. Yeah, right. He's made some endorsements of Raven coin,
which is interesting because Raven doesn't offer a lot besides being ASIC resistant, basically by shifting between 16 different protocols for mining.
Right.
Well, it's a Bitcoin fork.
Yeah, and I think that what you're saying really illustrates the fact that as much as this seems to be a very open community, there's still a lot of echo chambers. I think there's a lot of information out there and it's really hard for everybody to filter through it. And, there's some things that, Zcash is so many of these things are like, they're cool experiments. They've got some great projects and great people working on them. But at the same time, once we start having, better rubber on the wheel, does it make sense to keep making a wooden wheel? There's definitely some progress happening that, it is going to leave a lot of these projects behind. And I don't know about Ravencoin or exactly, I haven't read into them as much, but my point being that there's a lot of diversity in the perspectives that you can hear in this space if you listen and see what it is about different projects that really has people, excited.
Well, I think you're right, Ryan. I think you're talking about, people get excited about the social impact, and this is different than other technological innovations, where the industries itself, if you think about the industry economics, you'll think about, the big trade shows, the electronic trade shows, or the web or, internet protocol trade shows. They're driven by these big companies, Cisco, Microsoft, IBM, that type of thing. Who come to these shows and they have a chance to sell their latest products and build or enhance their reputation. If you think about the nature of the economics for coins and tokens, they don't have the same incentives, right? Once they've done their initial coin offering, they might have some coins they've kept back, but they're not selling their products in the same way. And that may speak to how companies may architect their tokens or their business models in the future. But what's interesting is that a lot of the projects that are out there that are successful, they don't make money by selling more people on their company at trade shows. They make money by developing a better coin and, you know, getting it on exchanges or getting, you know, the product to work or the app to work or getting more apps to run on their platform. So I think it's much more development focused. And the reason why people show up to the conferences, maybe more, as you were suggesting, social impact. So I think the nature of the industry may evolve differently than what we've seen from other tech industries, where some of the social impact conferences or based conferences may have more impact, may have more influence on the industry than some of the more traditionally commercial conferences. What do you think?
Yeah. Absolutely. Absolutely. I think that, boy, yeah. Stephen, what do you think?
I don't know. I was just doing a little homework on the FAT protocol thesis, which was one of the things that came up in the talk. What's the question again? I'm sorry.
Well, so yeah, we're
versus commercial.
Yeah, we're talking about this dynamic with the conferences, and I'm curious because it's also something that, you know, I look at going to Boston and going to New York and how some of these different conferences run, and even, you know, went to Philadelphia, went to Dallas, and I've been thinking a lot about this because, you know, I want to make sure that I cater a Vermont conference appropriately. And it's really interesting, and how we source sponsors or support for the event, how we source participants, even whether we're even charging or we're trying to do a free ticket and get sponsorship to cover it. They're all questions that kind of come into play that all I think pertain to this topic of how does the money influence the event. And it's really interesting to observe the space in the industry and see the differences in these events and how they're funded and how they're promoted.
What I was going to say earlier was I think some of it comes down to just the branding of the event in terms of the emphasis, right? I mean, there's Block Fest, you know, sounds like it's about blockchain as a technology. Token Fest sounds like it's about tokens, either tokenization of securities or investing in tokens.
Right.
So I think that's part of it. But I think, you know, what you said earlier about kind of echo chambers of people, or I'll say separate communities, right? Because there's different emphasis. And I didn't see it at Token Fest, but I got the sense that the branding and the marketing were more, I didn't see it in the attendance, and that's probably because of the devaluation of all of the cryptos over the last 9 months. And a lot of people just didn't show up who might have otherwise, who were kind of riding the wave, right? But what I felt was some of the marketing and the message of it was about getting rich investing in tokens kind of thing. You know, managing your tokens, wallets for your tokens, whatever that, and tokenization and ICOs, right? So a lot of the keynotes and stuff were about marketing your ICO, launching your ICO. So it seemed to be, just from the way it was billed and the way they speak. I mean, there were significant components about, you know, the future economy and convergence of token, you know, all this other stuff and the disruption, but there seemed to be a pretty strong thread there about tokenization as a means of fundraising and investing in tokens as a means of passive investment.
Yeah. Yeah. You know, it's interesting too, because I remember, you know, getting a little bit irritated one time. There was a few times this sort of occurred, but there was one in particular where I was looking at one of the gold coins, and I won't say it seemed like there was more than one there maybe. But I remember multiple times asking, you know, as they're telling me that they're doing this blockchain-based solution for gold and tracking and tokens, and I go, okay, so explain to me where the linkage is between your blockchain and your tokens and your actual mining hardware and the individuals participating with that process. And literally, there was one person I counted 5 times. They answered my question with how their tokens pay investors. And so that illustrated to me that the person I was talking to didn't know if there was even any real connection with blockchain and what they were doing. And B, all they really cared about was talking about how the next person was going to invest $10,000 or $100,000 into their token.
So they were basically selling the greater fool theory.
Exactly. And so I found that kind of interesting and illustrative, while at the same time seeing companies like Ambrosius, which I don't know if this would be right up their alley, but some of the things they were talking about, putting sensors into the supply chain in different ways to manage transactions and conduct refunds when appropriate. That's the kind of thing that I'm looking for in a company. And if I see a gold company that comes to me and says, oh, we use XYZ hardware, we use Honeywell, we use this software to interact with our hardware so that we can start pegging transactions based on unique devices that are in our network. I mean, that's the kind of conversation I'm looking to have when it comes to Token Fest, right? I want to see, how are we tokenizing things? And I think you're right. I think we're still in the, how are we going to promote our token, as opposed to how do we link tokens to the real world and make them a functional utility. Whether they're a security or they're some kind of utility, there's still a token that represents something real and something that we can interact and do business with.
And that, not to sell it short, that element was there. It tended to be in the invited speakers who were on panels, not in the booths and not the attendees in the audience.
Absolutely. Yeah, I think that's a great point. I think some of the speakers were really incredible. And I think that if we can get that message across to the audience, attending Token Fest to hear some of the speakers was definitely worth it. And there was some excellent opinions to be expressed there. And, some of the narrators, I mean, I think one guy, I mean, I've met John Hargrave, so I love him anyways. But listening to him narrate a panel was just a great conversation to be able to listen in on. They had some really great speakers there, some great opinions expressed, and just a really wonderful character to guide the conversation. And he's a local Bostonite that's a great resource to the industry. So I think there's a lot of that kind of value added by that event. And I think that I was a little disappointed that we didn't have the audience and the booth sponsors to kind of match that quality. Because I think the audience was just light because of the market being down, and it'd be nice to see more enthusiasm from the public. But I think you're right. I think also we've still got some sponsors in there that are just, they're pushing a token, and we could use more depth and quality coming from the industry for sure.
Yeah, and so the reason I got distracted a little earlier looking up this FAT protocol thesis, you guys familiar with this?
A little bit. I've seen a bit of a presentation talking about how we're really moving toward FAT protocols that integrate across sectors and thinning the application layer to be easier access, lower barrier to entry.
Yeah, and it's there's a lot of contention about it. I think I don't believe it, frankly. Particularly after some of the speakers at Token Fest, after listening to the great debate between Mashinsky and Kling. And what they were saying is that, with the internet, it's built on these protocols, TCP, IP, UDP, VoIP, for instance. But the protocols don't store value, and there's all this value that's derived from them on all the apps, the cloud computing, Amazon, whatever. But the makers of the protocol, or the protocol itself, doesn't really store any value or have much value. It's a thin layer in the value stack, so to speak.
Okay.
And so when they say FAT protocol, they're saying with cryptocurrencies or
hey, you know what? Sorry to cut this off, but we're running over time. I'm going to cut this off and hop on another call. Okay. And actually, FAT layers, I think we could make a whole video out of that.
Okay.
So yeah, let's definitely continue that conversation. I want to thank you guys both for joining us here with Interchain Live and for coming down to Token Fest. I'm glad we all got to make it. Thank you all for joining us for the conversation, and we will keep it going. Keep in touch.
Thanks.